We should point out that names like Digital Realty and Bloom Energy, they're also higher as they are becoming essential players and literally powering Oracle to hit its longer-term guidance. Our next guest says without Oracle making major investments in power from here, it may not get there. He's sticking to his neutral rating on the stock, but did raise his price target from $195 to $310. Let's bring in RBC Capital's Rishi Jaluria. Rishi, great to have you with us.
Yeah, thanks so much for having me.
It seems like this should be, a sizable asterisk to their guidance, especially when you're taking a look at guidance that's 5 years out for the cloud business, Rishi. And I'm wondering if that could actually be the throttle to Oracle's growth story, the power supply.
Yeah, and look, it could be a lot of things, right? That's always the risk with giving these really long-term targets looking out to 2030, right? Obviously, it sounds impressive that you're going to have about $145 billion of OCI revenue in FY30, but you're exactly right. Like, we have to think about, allocation of GPUs. You have to think about, demand continue to inflect upwards. You have to think about all these contracts and that they have, and all of them just kind of being able to meet all their obligations, right? Because everything's trading on RPO here. And so power could be a huge one, and we've heard from a lot of other vendors, they're already contemplating about power shortages down the line. You've seen Microsoft make investments in nuclear energy. You've seen other competitors make similar sort of investments in the power area. I think Oracle is going to have to make some of those investments. They've been saying that it's not expected to be a near-term headwind. But I think if you're guiding out 5 years, we need to have a little bit more of a cohesive strategy around where exactly all that power is going to come from.
So then you start having to think about this revenue growth, but at what cost? There's the other CapEx, whether it be the infrastructure directly related to cloud, the investments in the energy needed to power all of these data centers as well as infrastructure. And then there's also the notion that, this is a business that it could be single-digit business in terms of margins. I mean, what kind of quality is this revenue growth in your view?
Yeah, no, look, it's a really great question. I would posit two things here, and this is what's keeping me neutral. And clearly, I've been wrong on the stock given the performance, but the kind of things keeping me neutral here. Number one is a lot of this. You'll notice the deals they're doing are excess capacity deals, right? We've heard of Microsoft and Amazon and OpenAI and everyone talking about being severely capacity constrained, even when it comes to GPUs. Oracle has a lot of allocation of GPUs. They have a lot of excess capacity, and they've clearly benefited from that tailwind time and time again. So that's one thing that I say, well, what happens when we actually start to hit parity in terms of capacity? Does some of that start to get pushed away from Oracle? I mean, Microsoft has talked about wanting to bring all of this back in-house over time, and Microsoft is obviously a major customer, as is OpenAI here. So that's piece number one. I think piece number two that we really need to think about is exactly to your point, what is the margin on this? By my math, some of this margin could be, some of the margin on OCI could actually be, for certain training use cases, negative, right? Hopefully, as the balance of the power shifts more towards inferencing and fine-tuning, and you think about reallocating those clusters away from inferencing to fine-tuning, there's maybe a little bit of margin uplift. But, the idea that this can be a very, very margin accretive business, I need to see more evidence before I could begin to believe that.
Yeah, I was going to say that all sums up, I guess, why you're remaining neutral on the stock, even with this huge jump in revenue guidance. What are your preferred ways to try and get leverage, though, to these longer-term trends? I mean, I know Microsoft is probably still right there.
Yeah, look, Microsoft is still top of my list. I would say, what Microsoft is doing to me is higher quality AI revenue, because it's not just at the Azure layer, and they're being very picky about where they're actually building out and where they're walking away from lower margin businesses. But it's also at the data layer, the developer layer with GitHub Copilot, at the application layer with M365 Copilot. They're monetizing AI throughout the entire stack, and I think they're actually innovating around it, not just providing bare metal and GPU capacity. So Microsoft is my favorite way, but I think there are a few under the radar ways to really play AI. And I'm saying this is a huge bull on AI as technology is a 5, 10, 20-year trend. I think MongoDB as a way to play the development of net new generative AI applications, especially those leveraging unstructured data. I think HubSpot is a great has a great innovative AI roadmap. And as we think about AI changing the way sales and marketing occurs, I think they can be very well positioned there. And even Intuit, I mean, it's a name that everyone knows with TurboTax and QuickBooks. I think there's a huge opportunity for them to leverage generative and agentic AI and really bring that to individuals and have virtual agents that do your taxes and close your books for you. So those are three, I would say, more under the radar ways to play AI beyond Microsoft and Oracle.